Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the hosts here, and today we have a lot of important things to be talking about. And I'm just going to say it how it is. It's not looking too good. And the reason why it's not looking too good is because interest rates are going to increase. They might even speed up the time it takes for them to increase, to increase them, okay, by increasing them by an increased amount. This is bad news. This is not what the market wants to see. And this is the reason why I am not flipping bullish. How can I flip bullish if the money flow is not suggesting that? The yield has now inverted so aggressively that the reading is now minus 1%. The last time we saw this, okay, and the last time it was like this was in 1981. Okay. The LIBOR rate has now hit 5%. And if you don't know what the LIBOR rate is, it's the interest rate in which banks borrow money to each other. Okay, and the last time it was like this was in 2007. Okay, now, okay, is this a coincidence or is this a very, very big warning sign? Okay, the reason being is because in 1981 and 2007 there were two critical financial situations that happened and did bring the market crashing down. But what does this mean? How is this going to affect the market? Is it going to negatively affect the market, or can we get through this and can we start this bull market? Well, this is what we're going to be having a talk about within this video. We're going to help. We're going to get help by looking at the charts. Okay, obviously we're going to take a look at Bitcoin, but we're going to take a look at the DXY as well. The DXY is a really, really important chart right now, and it's going to really, really help us understand where the market could be going and could be giving us an understanding of where smart money could be putting their money as well. Okay, so if that sounds interesting, please make sure you smash a like on this video. If you smash a like on this video, I can continue to bring the trades that I bring you. I can continue to bring the analysis that I bring you as well. Okay. Today is very important because a lot of things have changed, okay, especially because of what Jerome Powell said yesterday. The market's brought in a lot of volume yesterday because of the questions that Powell was being answered. But to be honest with you, it's really not looking too good. The market is not looking too good. Yesterday wasn't the best day to be trading because the market was so volatile. Looking at the 1 hour, there was a potential long position that we could have taken. However, I don't really want to look for a long position at this moment in time, considering how bearish the market is actually looking right now. But yeah, that also happens, between 4 and 5 o'clock in the morning as well. So I was still asleep, so we would have missed that trade anyway. But yeah, please make sure you smash a like on this video if you want to continue to see the trades that I bring you and you want to continue seeing this analysis. Please make sure you smash that like button. The last trade that we took was this short position from all the way up here, and as you can see, this short position is playing out really, really nicely. Make sure you follow us on Twitter as well. I post updates on Twitter and I post updates on the trade that I was taking as well. We entered at $24,730 and, you can see this trade is playing out really, really nicely. So if you want to see more trades like that, please make sure you smash a like on this video and I can continue to bring the trades for you. But jumping into the charts, what we can see is Bitcoin is still sort of ranging. Okay, yes, it had a lot of volatility coming in yesterday. Okay, lots and lots and lots of volatility coming in yesterday because of Jerome Powell's testimony, and he's got another testimony today. So I'm guessing there's going to be a lot of volume coming into the market, a lot of volatility coming into the market again. Okay, so it's not really the best time to be trading, because you can see this candle right here. You can see this candle right here. The market was looking, but well, I think it was looking very bullish coming into it, and then afterwards, we just saw it dump, and then it was bought back up pretty quickly. That's not the time to be trading. You don't want to trade during a candle like this because this is the number one way to get wrecked. I can tell you that. But yeah. Markets are looking tremendously bearish right now, okay? And we're getting very, very close to that target that I gave you when we entered into this short position, okay? So we entered into this short position up here at $24,730. I was looking for an entry of $25,200. Unfortunately, I was stupid and I forgot to put my limit order in, and I did miss that. But initially, we still got into that short position. And I was telling you, I was looking for a short position from $25,200. So initially, I told you, and I even entered into the trade, and that trade is playing out really, really nicely. What I've been telling you is that I'm looking for the price to come down to $21,470, which is this horizontal white line here. We're getting close to it. Okay, we are getting close to it. I still think that is a possible target, a very possible target. Okay, major resistance here. Major resistance before the break towards the upside, then major support after the break towards the upside. This is a very, very important level that the price is most likely going to test and potentially even find support on it before the potential break towards the downside. And yes, I say potential break towards the downside because I am still very, very bearish. I've been telling you now for months and months and months, medium to long term, I am still bearish. Okay, I'm still very bearish within the market, and everything that happened yesterday has just strengthened my bearishness. Okay, it has just strengthened how bearish I am. And I've told you, if we're going to remain below $25,200, I am staying bearish. If we can get above $25,200, yes, I can flip bullish, okay, as long as we stay above $25,200. But I cannot do that because we are below $25,200, and we have so many bearish things happening right now. There is just no reason to flip bullish, okay? Even throughout this whole pump towards the upside here, okay? I was telling you I'm remaining bearish unless we get a break above $25,200. And what happens? Well, we got that exact rejection from $25,200. So I'm remaining bearish, okay? Okay, we'll get onto this in a moment, but we're looking, if you've been following the channel, you will know that we're looking very, very similar to a chart that signals more downside is to come. Okay, so we will have a look at that as well. But Bitcoin, I'm expecting it to continue to pull back, okay, down to $21,470. If it pulls back down to $21,470, I will come live and I will reevaluate the situation. Okay, I will reevaluate the situation, and we will come to terms on whether Bitcoin is going to bounce from that level. Okay, is it looking bullish at $21,470, or is the price looking bearish, as in we're going to break the support and move down to $20,300, which is that sort of next semi-major level. Okay. And then if that's broken, again, we're looking at $18,800, okay, like I've been saying previously. But right now, all we need to focus on is that $21,470 level. If we're going to continue to come down to that level, okay, we could either bounce off that level or we could break below that level, okay, and that's what we have to reevaluate once we get to that level, okay, and that's what will happen. I will reevaluate that once we get to that level. And of course, the trade that I have open as well, currently in just over 55% in a profit. If we do come down and test $21,470, I am going to take some more profits off of that trade, okay, because that is a major level. So I'm not going to risk it. I'm just going to take some more profits off the table and then let the rest of the trade ride. Okay, so that's what I'm looking at for Bitcoin. Still looking for lower for Bitcoin. Okay, and especially in the medium to long term. Okay, I will show this quickly because I have shown it previously quite a lot. But what we're looking at is the Wall Street cheat sheet, psychology of a market cycle. Okay, we're looking very, very similar to this. Okay, we've got a high, we've got a low, we've got a lower high here. Then we've got the big capitulation event forming this anger phase where we form a low, a high, a lower low, and then a lower high, slowly churning our way down into this depression phase where we form a new low of the bear market. This is exactly what Bitcoin is doing right now. And with all the fundamental bearish news that is coming out as well, it's looking highly likely that this could happen. Okay, so we've got our high. Okay, we've then got our pullback, okay, forming this low here. Then we've got our lower high here, okay, and then we've got the big capitulation event here, forming this anger phase that we're forming right now. Okay, we've got the low, we've got the high, we've got the lower low, and right here we've got the lower high. Okay, it may not look like a lower high, but trust me, if you zoom in, okay, and I will zoom in very quickly. If we zoom in, we can see that this is a lower high. Okay, a very slight lower high, but initially it's still a lower high. So it still means that this chart right here is valid. Okay, and what we could be forming right now is this sort of double top as we leave this anger phase where we slowly churn our way down into the new low of the bear market. And this is what I think is going to happen. Okay, I think that we form this double top here, possibly form this double top here, okay, and now we're going to slowly churn our way down to support, break support at $18,800, slowly churn our way down to a new low of the bear market, which could be 14,000, maybe 12,000, maybe 10,000, who knows. but I do think a new low of the bear market is coming. I still think that is a possibility. Of course, that could be invalidated. And as I've been saying, a break above $25,200 would invalidate that target. But as long as we stay below that, I'm still going to remain bearish. Okay, I'm still remaining bearish. And I'm going to explain why. Okay. Well, I've explained why on the Bitcoin charts here, but I'm going to explain why on other charts and other fundamental things as well. Okay. Moving on to the DXY, okay, this is really, really going to help us with our analysis on Bitcoin, okay, because DXY and Bitcoin are inversely correlated. When the DXY goes up, Bitcoin goes down, okay, when the DXY goes down, Bitcoin goes up. And what are we seeing? Well, we're seeing the DXY go up. And I've been telling you for the past few days now that I am bullish on the DXY, okay, which is bearish for the Bitcoin. Why am I bullish on the DXY? Why have I been bullish? Well, I've been telling you, okay, we're coming into major resistance right here. Okay, we were coming into major resistance. Now, coming into major resistance, that's, fairly bearish, okay, because if it's major resistance, there's a high chance that we could see a rejection. But why have I been bullish coming into this resistance? Well, if we come onto a smaller time frame, we can actually see that we're forming a bull flag right here, okay? Coming into major resistance, we're slowly consolidating towards the downside, okay? This is why, this is what you call a bull flag right here, textbook bull flag. What happened? Well, we broke towards the upside. This is a very, very bullish sign for the DXY, which again, okay, I'm going to reiterate it. It is very bearish for Bitcoin, okay, very bearish for Bitcoin. Coming into for the DXY, coming into resistance, forming a bull flag, okay, is a very bullish thing for the DXY, okay? And now what are we seeing? Well, we're actually seeing the DXY attempt to break above this major resistance, okay? We've come and tested the very top of this major resistance level, and as of today, we're attempting to break above this major resistance. And if that is the case, where is the next level for the DXY? Well, the next level is $109. If the DXY comes up to $109, what is going to happen to Bitcoin? Well, Bitcoin is going to have another big leg towards the downside. Okay, so for me, Bitcoin is looking very bearish just based off this DXY chart here as well. Okay, looking at the Bitcoin charts, looking at the DXY, okay, solely looking at the charts here, they are looking very bearish. Okay, so the charts are looking bearish, okay? The technical analysis charts are looking bearish. What else can we look at, okay? Well, let's have a look at the ES. The ES is, fairly correlated to Bitcoin as well. What we're seeing, well, we're seeing the ES have this pullback, okay? Initially, we've got major resistance up here, okay, and I was telling you we were looking prime for a pullback. Reason being is because DXY was bouncing off support, and we were getting a bit of a rejection from this resistance here, okay. And I explained to you the next level that we're looking at is price actually coming down to this next major support level right here. And what did we do? We came down to this next major level, and we're seeing a slight bounce off of that level. Okay, we're seeing a slight bounce off of that level, and that's to be expected because this is major support. Okay, so we can expect that. Okay, but ES is pulling back once again because that DXY is pushing towards the upside. Okay, so we're most likely going to continue to see Bitcoin pull back as well because the ES is pulling back and the DXY is pushing towards the upside. Okay, so technically, the charts are very, very bearish. Okay, DXY bullish, Bitcoin bearish. Okay, which is just, when the DXY is bullish, Bitcoin is bearish anyway. But Bitcoin charts are looking bearish. What else is there? What else is happening? As I said at the start, okay, we've got the 2 and the 10-year yield curve inversion, okay, and that's at 1% right now. Okay, let's have a look. We've got the 10-year yield right here, okay. The 10-year yield is at 3.9, okay, 3.968 to be exact. Okay, what is the 2-year? Well, the 2-year is 5%. Okay, and actually it's now 2%. Okay, sorry, got my maths wrong here. It's now 1.1%. Okay, negative 1.1%. Okay, normally when you would invest for 10 years, okay, you would expect to see a higher yield, okay, than if you were to invest for 2 years, okay? But what we're seeing is that if you put your money in for 2 years, you're now getting a higher yield than you would if you're putting your money away for 10 years, okay? This is called the yield curve inversion. Every time we've seen this, okay, what has happened? What has happened every time we've seen this? Well, we've seen a recession, okay? And the majority of the time when we have a recession, we do see the markets have a big crash, okay? Like I said at the start, last time, we saw the yield curve inversion at, over one, over, sorry, negative, well, under -1%, okay, was back in 1981, back here, okay. This is the last time it happened, okay. Then we had a recession shortly after that, okay. And then what happened? The markets had a big crash, okay. So what we're seeing right now, okay, this is an outdated chart, okay, as you can see, 2018. Right now we're in 2023, but this orange line, okay, would be close to where it was back in 1981. Okay, so it would be somewhere down here where my mouse is. Okay, it'll be somewhere down here. Okay, and it's telling us that a recession is coming. Okay, and most likely the markets are going to crash as well. Okay, and as I said as well, the Libor rate has now hit 5%. Last time that happened was in 2007, and we all know what happened in 2007 as well. We had that big market crash as well. Yeah, if a recession hits, we will tank. Yeah, not all recessions can, really harm the markets, okay, that bad. But to be honest with you, last time that we saw the 2 and the 10-year yield curve inversion, okay, below -1%, okay, we had a big crash within the market. So this is why I think that this recession that we could be going into is going to have a big effect on the market, okay. Angela M, good to see you back here. Let's smash AJ, smash those likes. If you could all just smash those that like button, I would really appreciate it. Really helps me out, really helps the channel out, and I can continue to bring this content for you as well, and the trades that I bring you as well. Glad I'm still on 80% cash. I wish I was in 80% cash, to be honest with you, but the majority of my portfolio is within crypto. I do still have cash left over, just in case we do go lower, which I am expecting. Okay, I am expecting this, but again, 2-year has exceeded the 10-year. Okay, we've gone below -1%, which is very bearish for the market as well. Last time that happened, big recession came. Recession really took a hit on the markets, okay, and I'd be expecting the same thing to happen as well. What happens today? Well, we got Fed, we got the Jerome Powell testimony once again today. So today may not be the best day to be trading because we're going to see a lot of volatility coming into the market. Tomorrow, nothing is happening, but what is happening within the next 7 days? 10th of March, we've got non-farm payrolls, unemployment rates, okay? Last time we had the non-farm payrolls, they came in much higher than forecasted, okay? And this had a bearish reaction to the market. If this is going to happen again, we are going to have a bearish reaction to the market. Okay, this is hot. We don't want to see this. Okay, what we want to see is that it comes in lower than forecasted or as forecasted. But for me, I do believe that it's going to come in higher than forecasted. You can hold me to this, but I think we're going to come in higher than forecasted. Okay. If I'm wrong, I'm wrong. But where I see us right now, I think we're going to come in a lot higher than forecasted. Okay. So we're going to come in above 203K. Okay, again with unemployment as well. I think unemployment is going to come in under forecasted. Okay, so I think this could come in below 3.4, which again is bearish for the markets. Okay, what the Fed wants to see is unemployment going up. Okay, but if we're going to see unemployment actually coming down, okay, meaning that there's less unemployed people, this is actually fairly bearish for the market. It's weird how it works, but yeah, well, to be honest, we want to see. It's horrible to say, but we want to see people losing their jobs for the market to go up, which is horrible to say, but that's what happens. Okay, it happens every single year. Okay, when the unemployment rate goes down, okay, markets tend to go down as well, and when employment rate goes up, okay, we tend to see the markets go up. Okay, that's just what happens. What else have we got? 14th of March, core inflation rate year over year, inflation rate year over year. This is going to have a really big effect on what happens during the FOMC meeting. Okay, the Fed interest rate hike is going to have a big effect, and that is another really important thing that we need to talk about today. And then 15th of March, we've got PPI, month over month, retail sales, month over month doesn't really have a big effect on the markets, but 10th of March is a big day. 14th of March is another big day as well. These are two really important days that are really going to affect the market and give us a good understanding of where the market is most likely going to go, which, to be honest, I've already got a good understanding of where the market is going to go, and the market is most likely going lower. Okay, the market is most likely going lower because of everything I've said. Okay, because of everything I said, and that non-farm payrolls, I'm pretty sure that's going to come in much higher than expected. I'm expecting that, and same with the unemployment rate. I think that's going to come in under expected. And then inflation. Inflation for me, okay, has been coming down at a really nice rate. Okay, too good to be true. Okay, let's put it that way. Inflation's been coming down at a rate that is too good to be true. Okay, you look at a chart. Okay, let's look at a simple Bitcoin chart. Okay, the price doesn't just come down. Okay, what happens? The price comes down, the price goes up. The price comes down, the price goes up. The price comes down, the price goes up, and now the price is possibly coming down again. Okay, inflation cannot just come down at a steady pace. Inflation is probably going to come down, go up a little bit, come back down, go up a little. It's gonna come down at an imperfect rate. It's not going to come down perfectly. Okay, so for me, I am expecting at some point. Okay, I'm expecting inflation to start getting away from us before it starts getting better. Okay. So we have to be aware of that as well. And if that is the case, if inflation starts to get away from us again, okay, what the Fed's going to have to be forced is the Fed's going to be forced to increase potentially by an increased amount, okay, which is obviously going to be very bearish for the market. Okay, so the market's going to have a big bearish reaction towards that. So that's another reason why I think it's the markets are looking very bearish. Okay, inflation can't come down at a steady pace. It just can't do that. Okay, if it does, is once in a lifetime, a thing that's happened. But inflation is probably going to start getting away from us before it gets better. We've got to factor that in. But one of the biggest things that I wanted to look at today, and that is the FOMC meeting in 2 weeks. Okay, 2 weeks, 5 hours, 12 minutes. Okay. What has changed since yesterday? Well, a lot has changed since yesterday. Okay. A few weeks ago, it was looking almost definite that we were going to get a 25 basis point rate hike, which, okay, that's fine. Okay. We know what's going to happen when we get a 25 basis point rate hike. Market's going to pump coming into it. Market's going to pump afterwards. And then shortly after that pump, we are going to see a pretty major pullback. That's exactly what happened last time. Okay, exactly what happened last time. Let's come and have a look at the charts again. Okay, what happened at the end of January? Okay, well, end of January, coming into that FOMC meeting, we pumped. After the FOMC meeting, we continued to pump. Then shortly after that pump, we had a big dump. Okay, that was after the 25 basis point rate hike. Okay, so I would expect the same thing if we were to get that 25 basis point rate hike. Okay, however, okay, before yesterday, we were seeing a 70% chance that we were going to get a 25 basis point rate hike, and then a 30% chance that we were going to get a 50 basis point rate hike. Okay, so some of the analysts were changing what they thought. Okay, they were changing, okay, their prediction. Okay, they were predicting a 25 basis point rate hike, but now they're predicting a 50 basis point rate hike. Now, after yesterday's events, okay, after Jerome Powell's testimony, okay, where he spoke pretty hawkishly, okay, which means that he was going to be pretty harsh. He's going to have to be pretty harsh with the interest rate decisions. Okay, as in he's probably going to have to increase by an increased amount, as in an increased amount from 25 basis point rate, 25 basis points. Okay, and that's exactly what we're seeing now. The majority of the analysts are now thinking that we're going to get a 50 basis point rate hike. Okay, what are we seeing? We're seeing 74.2% of the analysts think we're going to get a 50 basis point rate hike. Okay, and now 25.8% think that we're going to get a 25 basis point rate hike. So the analysts are flipping. Okay, they're flipping from a 25 basis point rate hike to a 50 basis point rate hike. This is very bearish for the market. If we're going to start increasing again by 50 basis points, the market's probably going to have a negative reaction to it instantly. Okay, we're probably not going to see the market pump coming into that interest rate. We're probably not going to see the market pump after that interest rate. We're probably just going to see the market dump. Okay, maybe we're going to see the market consolidate sideways coming into it, but then as soon as that data comes out, I would expect a dump if it were to be a 50 basis point rate hike. If it was a 25, pump coming into it, pump after, and then a dump. But 50 basis point rate hike, I would expect just a dump from there, okay? Because this is very, very bearish, very, very bearish for the market. What have we seen previously? Okay, throughout 2022, 25, 50, 75, 75, 75, 75. That was very, very bearish for the market. We did see major, major pullbacks for that. Then December, we had a 50 basis point rate hike. Getting to where we want to be, okay? And then January 31st, Feb 1st, we had a 25 basis point rate hike, But again, market pumped coming into it, pumped afterwards, okay? Silly money thought this was bullish, but then smart money came in and realized this is not bullish, so let's sell, okay? Market pulled back, okay? And that would be exactly the same scenario if we were to get a 25 basis points rate hike again. But then if these basis points decide to, if the Fed decides to start increasing these basis points, back to a 50, market is just going to dump, because even the silly money is going to see, that if we're going to be increasing by an increased amount, this is not good for the market. Increasing by 25 basis points is not good for the market in general. Okay, so increasing by 50 is really, really not going to be good. Okay, so to reiterate it, I am very, very bearish on Bitcoin right now. I'm very, very bearish on the traditional market. I'm very, very bearish within the whole crypto market, okay, as it is. And this is why, since this channel started, I've been telling you I am staying away from altcoins. I'm staying away from altcoins. Why? Because if Bitcoin is going to have another leg towards the downside, if Bitcoin's going to break the previous low of the bear market at $15,500, then what's going to happen? Okay, the altcoins are going to have a much, much bigger pullback as well. Okay, a much bigger pullback than Bitcoin is having. Okay, yes, if Bitcoin broke above $25,200, I could potentially start looking at getting into some of the altcoins. But right now, I don't even bring altcoins to the channel because I'm not doing that. I'm not investing in altcoins right now. Yes, I do invest in altcoins. I'm not a Bitcoin maxi. Okay, I do invest in altcoins, but not when the market is looking so bearish. Okay, when the market is looking very bearish, I am a Bitcoin maxi. I will put everything I have into Bitcoin just to protect my portfolio. Okay. Turning your altcoins into Bitcoin is not a bad thing to do, okay, in the bear market when you think the bear market is about to happen, and that's what I did. Okay, as I noticed, okay, that the bull market looked as though it was ending. Okay, I put the majority of my altcoins into Bitcoin. Okay, and I'm very happy that I did that because it has protected my portfolio massively. Okay, massively. Because if you have a look at the average pullback for all the altcoins, it's a lot higher than the average. Than Bitcoin's pullback. Okay, I can tell you that for certain. Okay, I'm sure every single altcoin has pulled back a lot more than Bitcoin has. Okay, I can tell you that with certainty. Okay. So this is why I'm not bringing altcoins to the channel. I know that I see, people putting in the comments, can you have a look at this altcoin? Can you have a look at that altcoin? Sometimes I'll look at them. To be honest, I don't want to bring altcoins to the channel just because personally myself, I'm not investing in them because it's not the right time to be investing in them. Okay, there's a time and a place to be investing into altcoins, and that is when the bull market is about to start, or when the bull market is in full action. Okay, but now is not the time and the place to be entering into any altcoins because the market is still looking very, very bearish. Okay. So for Bitcoin, I'm expecting another pullback. I'm expecting another pullback to $21,470. Okay, that's that next target I have. And from there, we can reevaluate. Is the price going to pump from there, or is the price going to break below there and come down to the next semi-major level at $20,300? Okay, then we can reevaluate there. Is the price going to pump, or is the price going to continue to dump? Okay, and then come down to $18,800. Okay, these are the things that we need to look at. Okay, these are the things that we need to look at. And to be honest with you, DXY looks as though, let's have a look at the DXY again. DXY looks as though, it wants to continue breaking this major resistance here. Okay, this major resistance here. We still got that bull flag, remember, that's broken towards the upside. Okay, still have that bull flag. And if we're actually taking it from, let me just get rid of this extended right line quickly. If we're actually taking this, okay, from the bottom of the move, okay, all the way up to the top of the move, and we take this to the breakout point, where does this take us? Well, this takes us to exactly $109. And this is the exact target that I've been telling you that I'm expecting, okay? If we break above this major resistance level here, okay, on the daily, where am I expecting the price to go? Well, I'm expecting the price to go to $109. And now this bull flag here is also telling us that, okay? This bull flag is also telling us that we could hit $109. It's going to be very, very bad for the markets. And then if we break this major level here, where's the next major level? Well, the next major level is 114, okay, at these previous highs. And that would be incredibly bearish for the market, okay, if we were to break this major resistance level and move higher. Okay, so we just need to realize that the market is looking extremely bearish right now, extremely bearish, fundamentally and technically. Okay, so all of you bulls out there, okay, you may need to reevaluate on where you're sat within the market, okay, because it is looking very bearish right now. Okay, and yes, the market can change in an instant. It can change like that. Okay, and I'm not saying that can't happen. Okay, but right now, the market is looking very, very bearish. And if it's going to continue to look bearish, we are going to see the price continue to pull back. Okay, and this is why I have been shorting. This is why I'm bringing shorts to the channel. This is why I've shorted from all the way up here. Okay, and I've entered into this short. Okay. I would show you this short on Bybit, but I entered into this short on my personal account, as I said previously, and I don't feel comfortable sharing my personal account. I'll show you the account that I normally bring to the channel, but unfortunately, I took that on my personal account. But again, I've been showing you the profits over here on Twitter. Okay, I've been showing you the percentage profits, over on Twitter. So make sure you give us a follow there over on Twitter. And if you're new to the channel, make sure you subscribe, turn that bell notification on, so you never ever miss a trade. Okay, you never miss a trade that I'm taking. Okay, I'm bringing all the trades that I take. Well, every trade that I can bring to the channel, I'm bringing to the channel. Okay, this was the last swing trade that we took, and as you can see, it's playing out really, really nicely. Okay, so I'm going to continue to look for these trades. As of right now, there are no trading opportunities, which is why I'm not bringing any trades to the channel this week. Okay, I don't expect there to be a trade this week, to be perfectly honest with you. Okay, we entered into this trade last week. It's been a really, really nice swing trade. Even on the shorter time frames, the 1 hour time frame, the 4 hour time frame, I just don't see anything yet. Okay, let's have another look quickly, see if anything's changed. I just don't see anything now. Okay, yes, we can have a look at the 1 hour, and we can see that, we have this range right here. We've got the low here. We've taken that low, and we've had a swing failure pattern here. And then here we're forming a bullish divergence where we've got higher highs on the RSI, lower lows on the price action charts. And you can see the price has had a fairly bullish reaction to that. So short term, that could have been a long position. However, the market for me is just looking too bearish to enter into a long position now. But also that was between 4 and 5 in the morning. So, I was very clearly asleep at that time. So yeah, to be honest with you, there's no possible trade entries right now. But of course, if there is a trade, you will be the first people to know about it. I will make sure that I enter this trade on the exchange that I can actually show you on this channel as well. So yeah, if you've enjoyed this content, please make sure you smash a like on this video. I would really, really appreciate that. Brucey, I just don't believe in inflation numbers. Okay, to be honest with you, inflation numbers are fairly important. I was just about to ask you if you invest in altcoins. Yeah, I don't invest in altcoins right now. It's not the time. It's not the place. Okay, it's not the time and place. Time and place is when the bear market is ending, and for me, the bear market hasn't ended yet. And yeah, another time would be when we're just in a bull market. Okay, any pullback within a bull market is the perfect time to be getting into these altcoins, but right now is not the time at all. Right now is not the time. Okay, so yeah, I think that's everything I've got for you today. Please make sure you smash a like on this video if you've enjoyed this. I'm sorry I've got to be so bearish, but it's the reality of it. Okay, it's the reality of it. We have to be bearish because the market is screaming bearishness at me. The market is literally screaming bearishness at me. Everything, fundamentally and technically. Okay, on a range of different charts. Okay, so we have to factor all of that in. So yeah, I hope you've enjoyed this content. Please smash a like on the video. If you're new, subscribe, turn that bell notification on so you never miss any of the live streams. And yeah, the live streams have been pretty long recently, so thank you very much for watching them. And yeah, smash that like button, and I will see you maybe later on if the price decides to move. If not, I will see you tomorrow for that normal live stream. So thank you very much, guys. Just once again to reiterate it, I'm expecting the price of Bitcoin to come down to $21,470. If the price does come down to that level, then I will come live and I will reevaluate. I will reevaluate from that level. Is the price going to pump or is the price going to dump? we can reevaluate from there. But if the DXY is going to continue to push and try and break this resistance, then we're most likely going to go lower within Bitcoin. Okay, so I would say we're still looking very bearish, so we could break $21,470, but I will reevaluate once we get there, because we could be looking bullish in the shorter term once we get there. Okay, but yeah, once again, smash that like button, subscribe if you're new, turn that bell notification on so you never miss any of the live streams, and yes, I will see you later on, potentially today, if not tomorrow. So thank you very much for watching. See you later, guys.